Ladies and gentlemen, today I stand before you with an urgent message about the ever-evolving world of investments, particularly in the semiconductor industry. The recent earnings report of Taiwan Semiconductor Manufacturing Company, TSMC, provides us with valuable insights into this critical sector, and I want to ensure that you fully understand the current situation to protect yourself from any potential harmful implications. Let's start with the climax of our discussion, TSMC's recent performance. TSMC, often referred to as the global leader in semiconductor manufacturing, reported a net revenue of $17.28 billion in its most recent quarter. While this may seem impressive, it's essential to look beyond the surface and understand the broader implications of these numbers. TSMC's revenue growth of 10.2% quarter-over-quarter is undoubtedly a positive sign. It indicates that the company is still thriving and that there is strong demand for its products. However, the devil is in the details. When we compare this figure to the same quarter in the previous year, we see a significant decline of 14.6%. This stark contrast forces us to consider the cyclical nature of the semiconductor industry. In the world of finance, the saying, "past performance is not indicative of future results," couldn't be more accurate. While TSMC's revenue and growth may have been impressive in the past, it's imperative to recognize that the semiconductor industry is susceptible to external factors, such as global economic conditions, supply chain disruptions, and geopolitical tensions. These elements can lead to the rapid rise and fall of companies within the sector. Now, let's shift our attention to TSMC's profit margins. While they did improve slightly quarter-over-quarter, we must acknowledge that the year-over-year picture isn't as rosy. Gross margins were down 6.1 percentage points, and operating margins faced an 8.9 percentage point drop. These figures highlight the challenges that TSMC and the broader semiconductor industry are grappling with. As an investor, this is where you need to be cautious. The profitability of semiconductor companies can be influenced by a multitude of factors. For instance, supply chain disruptions, rising production costs, and changes in demand can significantly impact margins. It's essential to keep a close watch on how companies like TSMC adapt to these challenges and maintain profitability. The price-to-earnings (PE) ratio, while not specified in US dollars but in Taiwanese dollars, is another key metric to consider. The forward PE of 17.3 times suggests room for growth. However, this should be taken with a grain of caution. TSMC's EPS has been on a roller coaster ride, with a close to 25% decrease year-over-year. The key takeaway here is that while the future might look promising in terms of valuation, the recent history of earnings doesn't paint a similar picture. So, what can you do to protect yourself from the potential harmful implications of investing in the semiconductor industry? Diversification. Consider spreading your investments across various sectors to reduce the risk associated with a single industry. While the semiconductor industry can offer lucrative opportunities, having a diverse portfolio will help mitigate potential losses if the sector experiences a downturn. Long-term perspective. Don't make investment decisions solely based on short-term trends or a single quarter's performance. The semiconductor industry is cyclical, and it's crucial to adopt a long-term perspective. Look for companies with solid fundamentals and a track record of weathering industry challenges. Stay informed, keep a keen eye on the global economic landscape and geopolitical developments. The semiconductor industry is highly sensitive to external factors, and being informed about potential disruptions or changes in demand can help you make more informed investment decisions. Monitor profit margins. Pay close attention to the profitability of the companies in your portfolio, especially in the semiconductor industry. Declining profit margins can be a red flag, indicating that a company is facing challenges. Conversely, improving margins can be a positive sign. Risk management. Assess your risk tolerance and set clear investment goals. Understand that investing in the semiconductor industry carries a degree of risk, and be prepared to adjust your portfolio as market conditions change. Seek professional advice. if you're uncertain about your investment choices or lack the expertise to analyze the industry, consider consulting with a financial advisor. Their insights and guidance can help you navigate the complexities of the market. Now, let's look at an example to illustrate the importance of these principles. Imagine an investor who put a significant portion of their portfolio into semiconductor stocks, including Tsmc, during a period of high optimism for the industry. The investor didn't diversify and didn't pay close attention to the cyclical nature of the sector. When the semiconductor industry experienced a downturn due to a global economic slowdown and supply chain disruptions, the investor's portfolio suffered significant losses. Profit margins of the companies in their portfolio eroded, and their long-term earnings potential was challenged. However, another investor, who had a diversified portfolio that included various sectors, was better protected. While they may have seen some impact from the semiconductor industry's downturn, it was mitigated by the positive performance of other sectors in their portfolio. They also had a long-term perspective and didn't panic when short-term challenges arose. In conclusion, the semiconductor industry is undoubtedly promising, but it's essential to approach it with caution and a well-informed strategy. Understand the cyclicality of the sector, monitor profit margins, and, most importantly, diversify your investments to protect yourself from potential harmful implications. The key to successful investing lies in informed decision-making and a long-term perspective. So, stay vigilant, stay diversified, and protect your investments.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.